I'm Julia Cordova, and welcome to the Place Your Trades Network. We are the network that focuses on trading daily options using the CME Group event contracts to trade E-mini S&P, Nasdaq, Dow, Russell 2000, gold, silver, euro, crude oil, natural gas, and copper. So today I have a great show for you. I've got Helene Meisler. She is a columnist, and she writes a daily column for realmoney.com. It's amazing. And we're going to talk about whether or not the market can keep climbing this wall of worry, or whether or not there actually is a cause for concern when we look at the charts. Today's broadcast is brought to you by Tradeovate, which has built a custom app dedicated to trading those CME Group event contracts. That's what we're all using at Place Your Trades. And just want to start off by giving you just a 3-minute market overview here. It's been a crazy morning in the market. I'm sure some of you saw some of the fake news that came across that took the market right back down and then right back up for a little bit. We don't know if that'll hold or not. I'm feeling a little bearish this week personally, so we'll see whether or not the bear in me wins out just for this week. And I wanted to talk about, though, how I used event contracts this morning. I bought a couple of different things. I can't show you on my screen because I was having some technical difficulties. I'm sorry, but if you sign up for the mailing list or you click around on the site, you can see what the event contracts look like. And on a day like today, when natural gas is absolutely freaking pooping, the reason, by the way, I think, is because there was a contract roll. So I think they're kind of selling into that contract roll because the new contract started a little higher. But on days like today, if you do have like a long natty position and you wanted to hedge it, you could buy the nose for natural gas and then just make a little funny money to, if you're long natural gas in a different account. Or if you're like me and you're somebody who, kind of likes to catch the knife a little bit, but you want to wait until there's confirmation before you go into the futures or your big account, you could buy the yeses natural gas, even though it's still pooping now, and you could have an opportunity there. So I did buy a couple of the yeses because how not that many, by the way, but just a couple, because I wanted just to see whether or not it could recover a little bit into pit close, but we'll see. And then also I'm looking for the metals to pop early in the week. So I'm just buying a couple of the yeses for the metals, probably today and tomorrow, and we'll see whether or not one of them hits the lottery. I hope so. All right. With that said, hi, Helene.
Hi, how are you?
I'm fabulous, thank you. Thank you for joining me. I really appreciate it.
Thanks for having me.
I'm such a goof because I've read your profile so many times, but I don't believe I've ever clicked through and seen your daily articles like on a consistent basis. I think maybe I've checked one out occasionally when you might have posted it. But I gotta tell you, just this last week, because I knew you were coming on, I started looking at your articles. They're freaking great. And I'm going to make it part of my daily routine. I am. I don't know why anybody, because it takes 2 minutes to read them. And for me, you look at things that I don't look at, and you're not, a lot of columnists, a lot of people who write are clearly biased one way or the other. I feel like you present, if there is one, you present it from both sides. If there's an argument to be made, and then let somebody decide for themselves where to come down on. And I just want to say I'm a huge fan of your writing. I think everybody should make it part of their daily routine to read your column. It's phenomenal. I wish I was as good at writing.
Well, thank you.
Yeah, no, yeah. So, and I was lucky because Helene sent me her article for today earlier on the weekend, and I took a look at it, and that's what we're going to talk about today. Whether or not, because the market keeps going up, and people, sometimes I've been a bull pretty relentlessly for a while, and people keep saying, you're buying a generational top, there's going to be a credit problem, blah, 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 blah. And I'm just like, the price is going up, so I'm buying it. But so let's talk about that.
Okay.
Yeah. So Savannah, could you please share the screen? There we go. So let's go to the first chart here. So this is market sentiment.
Right.
It looks bad.
Well, everybody, my point is everybody, the bulls are complaining that there's a huge wall of worry. And there is. I mean, this is even lower than October, and the S&P is how many points higher? I mean, 10,
Yeah.
12, 14, whatever it is, percent higher. Nasdaq 17% higher, 20% higher, whatever it is. And I say it's understandable why sentiment is so sour. I think it's ultimately bullish that sentiment is so sour. Okay. But I also understand why it is. Because if we go to the next, okay, this is the McClellan summation index. And it's a measurement of breadth. And what it does is it tells you what direction the majority of stocks are going. Okay. So first take a look at that October low. Okay. Look at the surge that this had off of that. You had the dip in December and you went right back up again up until February. That's what the majority of stocks were doing off the October low. Okay. Now take a look at what the last 2 weeks in the market, 150 points in the S&P, and I don't even know how much in Nasdaq done. Nothing. It's still going down. It can't even go up. And so that's why I say it's really understandable why people are bearish, because the majority of stocks are not participating.
Now, how often do you look at something like this? Is this something you just check in on weekly, or is it
every day?
Every day. Okay.
Every day. And I calculate what it will take to turn it from down to up or up to down.
Okay.
And and it won't take a whole lot to turn it up, which is why I have been wrong, but I think that we're going to get catch up in the down and out names. Okay. So far, I've been wrong for 2 weeks now. So,
well, I mean, I know how you feel, because last week I was trying to make long RTY short, just at the end of the week, by the way, long RTY short NQ a thing, because I think, out of all of the indices, RTY's already gotten corrected a lot and on the verge of death. So I'm like, if it dies, everything dies with it. So if it comes alive and the others kind of come back to life, that'll kind of balance everything out. But it's hard to, usually you think all the indices move together, and
they haven't really moved together. They started diverging drastically in 2021. And they diverged almost the entire year in 2021 until everything started to come down in early 2022. And then last year, they sort of moved in tandem. But since the March low, we've had another drastic divergence that's begun.
Okay.
And I'm in the camp that says that the others, as I say, need to play catch up. Not that the favored few have to come down. It would be better if the favored few came down and the others came up, but
right. So how does somebody trade with that? Do we pick names? What do we do?
Well, the names I'm interested in are I think the banks are trying to bottom, and I kind of like energy.
Okay.
So, but there are also some down and out tech stocks that I think look okay. I just don't want to be so heavily concentrated in tech because,
right.
Just because it's ridiculous, the moves in some of them now.
Yeah, no, I love that. I love that. And that will help my RTY play
right.
too. Yeah. So, yeah, I love that. Okay. So what is this?
Okay, so this shows you the divergence. If you take a look at, remember we just discussed that October low and how that summation index really surged off of it. But look at how Nasdaq, which is your lower pain, just kept making lower lows. It barely lifted off that low, and it made lower lows into December. But now take a look at the top. The top panel is a breadth indicator. It's up volume minus down volume on Nasdaq.
Okay.
And look at how it just kept making higher lows right into December. And then you see the January surge. So in other words, to me, it was very understandable why you would like the market off the October low, because the majority of stocks were going up and the volume in those stocks was going up. You had more up volume than down volume. Whereas, and so what I always call the index movers, that's, the gang of 10, Microsoft, Google, Apple, they move the indexes. Without them, the index doesn't do anything. And so what you had was they were going down in the fourth quarter of 2022, while everything else was enjoying an up move. Now what you have is the gang of 10 are moving Nasdaq up, while everything else is sort of languishing. I mean, they're not going down, but they're languishing. They're not doing what they were doing in the fall. And so to me, that's a problem. But again, I want them to catch up. So far, they've not.
Gotcha. Okay. So, sorry. Now, these are the new highs, right?
Right. So again, if we go back to that fourth quarter of 2022, look at how many stocks were making new highs. You regularly had over 100. And then you showed up with that surge in early February at 200. But now you can barely get over 100 new highs on Nasdaq.
Yeah.
So again, it's another breadth indicator. It just shows there's no willingness for people to buy anything but a handful of stocks. I need them to discover all the other names.
Got you. So, okay, I got you.
And because if they were buying a lot more, you'd regularly see this well over 100 stocks making new highs on a daily basis. You just don't.
Yeah, it does look a little, I mean, for what the market's been doing lately, like straight up basic, well, at least in the last week or so, it looks a little like.
It looks anemic.
Yeah, it's like, who cares?
Right.
Yeah, it looks so, okay.
All the money is chasing fewer and fewer stocks. We need some of that money to chase the other guys.
What could cause people to rotate out of that? What would be an impetus?
Oh, but then I'd be writing a narrative.
Oh, okay.
Terrible at writing narratives. But the reality is that if we knew, it'd be priced in. So I don't know. I have no idea.
Who knows? I never know about this stuff either. Whenever I try to think about what makes sense, it never happens. So,
right.
I mean, that's what I mean. Yeah. So let's go to the next one here. So this is John Deere.
Right. So my point here is that here's what the majority of stocks are doing in 2023. That's a down channel. So if you want to go back to my original premise, why are people so bearish? Well, hello.
Their account balances are going down.
I mean, you've got a lot of stocks that look like this, but the flip side of this is they're not plunging. They're not like breaking and making, gapping down to new lows. They're just sort of dripping. They just drip every day. The lows are lower, the highs are higher, but the highs are lower, but it's not like it's obvious, if you know what I mean. It's not like it grabs the headline because the stocks are just, down a little bit every day.
I've always wondered that because it seems like there is some, I don't want to call it manipulation, but it's interesting about the stocks that they report on. Tesla's down 3%. It's like, do they say when it's up 5%? Sometimes they don't, sometimes they do. It must be their own positions, but you're right. They don't report on, unless they have something, I think, that they're trying to make dramatic. They don't really report on daily movements, even if they're extreme sometimes.
Right. You could be sure that if Deere was up, $50 on the day, they'd report it.
Right.
Or if it was down $50. But what are you going to say? Deere was down $2? I mean,
right. Exactly.
But the end result is it's been terrible.
I mean, so are you in this name personally,
No.
or are you just using it as an example?
Using it as an example only because they reported earnings on Friday, which were pretty good. And you can see that it tried to rally and then boom, they just knocked it right back down.
A rejection. I'm going to take a look at this stock though later.
I think it's coming down today to the bottom trend line. And so, technically you should really get a bounce. And you can see that there's a gap over there from October. So if you hit the bottom trend line somewhere near that gap, it's probably not a bad trade.
Yeah, it looks like mid 50s, mid 300s, 340. I'm just squinting, but yeah, okay. I mean, I'm going to take a look at it. Why not? I need some diversity as well in my portfolio. So XLI,
the industrials, all we hear about, or we used to hear about, was the infrastructure bill and how great it was. And you can see the big lift off the October low. But since November, nothingness. I mean, you own industrials, you're like, oh God, are they ever going to move? Again, you can understand why, like if you own industrials, how could you be bullish? The S&P is rising and you're sitting in this thing that's like dead.
Yeah. Do you think that looks a little bit like a Head and Shoulders or no?
Well, it really is a diamond.
Yeah, it doesn't look. Yeah, because
and a diamond is a pattern, is a Head and Shoulders pattern. Well, I keep thinking if it ever breaks 96, it's done. But they don't break.
It's like stringing us along.
It hovers.
Yeah, no, you're right. Because if somebody asked me whether that was a Head and Shoulders, and I just kind of glance at it, I think that shoulder is too high. It's like deformed. It's like a deformed. It looks like, it had a double armpit hair there, So I think you're right. I think it's more of a diamond shape, and it could be a continuation pattern, or
diamonds are usually tops. But again, you can't. It never breaks.
Okay. So this one looks like a Head and Shoulders though, doesn't it? Or not?
100%. And then here's another example. You would have thought breaking 48, done. This is over, right? Look at it. It broke 48 and it sat there.
Now that's XME. That's the metals and mining ETF. Mm-hmm. Okay. Yeah. Yeah. I mean,
that's what I mean. It's like, stocks are not plunging. They're just nothing. There is no interest in buying them, and there's a little bit of interest in selling them. So I hear your storm.
Oh yeah, you're going to probably hear my mother text in like a minute because she's going to say that my dog is in her lap. I've got Jada over there. I didn't expect I would have not done that to her. My poor mom. Because Jada's a big lab, and my mom is in her 90s, and so it's not. Yeah. Anyway, okay. Let's is that the last slide we have?
Is that the last slide?
I think so.
It might be. Okay. So anyway, that my point in all of this is the bearishness to me is very understandable. Okay? I mean, and I think that the bearishness resides in all of these stock charts that I'm showing you. And that's why I think if you're going to use sentiment as a guide here, you're going to say the stocks that need to play catch up because people are so bearish on them are all these stocks that I'm showing you. And in addition to the banks and energy, But so far, the market thinks I'm wrong.
Well, I mean, yeah, and a lot of people say you short the weak links, right? You don't short the strong.
Right.
So,
well, unfortunately, I've never learned that. I'm always looking for what everybody hates.
I do the same thing. I try not to get too involved. I put just a little in just to satisfy my, I'm getting a bargain thing. But yeah, I mean, I think both of us kind of want the same thing in terms of things going up. And you're right. Energy has been. So for 3 weeks in a row, my XOP chart has been I have an ascending support line, and it's been doing the bare minimum not to break. And there's a huge gap, like fall underneath it. If it breaks, it's going way down, in my opinion, but it's not breaking. I was like,
or it's going to break and it's going to do that XME thing.
Oh yeah.
Right.
Oh yeah.
So that's it. It's like you can't even if you're bearish, you can't even make money on the short side.
Now, one of the other things I wanted to ask you is you look at the call puts, right? You look at the ratio. Put calls ratio, and I mean, are people shorting right now or not? Can you tell?
I can't tell. We've had a couple of days. So like last week, Tuesday, I think it was, we had the market headed south in a hurry, and you could see people got really bearish in a hurry.
Yeah.
And then we started lifting again, and by Friday they were back to ho-hum. But in general, I've not seen a whole lot going on there. I do look at the DSI, the Daily Sentiment Indicator, and for the VIX, that got down to 10 midweek last week. So I think it was on Thursday. And so usually a reading in single digits means for the VIX means you better start looking for some volatility. So it got to 10.
I hope so.
Right. So I keep thinking we should get some volatility, and these stocks that are down and out should start to show that they're holding because there's nobody left to sell, and then they'll be okay. But so far, that's not been what the market's giving me.
Do you ever look at like commitment of traders or anything like that?
I do not. I know a million people use it.
Yeah.
I'm sure they're very successful with it. It's not something I've ever used.
But I mean, that's one reason, the breadth thing though. I don't look at market breadth at all. Sometimes people say something to me and I'm like, I don't even understand what you're saying. I'm looking at my lines or whatever. But again, just from reading your article, which by the way, takes 2 minutes. They're not long articles, but they really do, I feel, give somebody kind of that edge when you're drinking your morning coffee or my morning soda or whatever. I would just recommend that everybody, sign up for to read your daily column. I think it really is just incredibly valuable. That was all in one column. You could have gotten all of that in 2 minutes from your coffee if you read it every day. And I just want to say, I'm a big fan of you. And that's
Thank you.
All right, everybody. Well, Helene, anything that you want to talk about with me that we didn't talk about?
No, I think that pretty much covers it. Now maybe everybody can go out there and push that small cap index.
I'm going to go chart John Deere.
I don't even know what it's doing today because I've got my.
I don't know. I'm not looking either. But why not? I'll chart it out for us.
I don't know. Can you push those banks higher too, please?
Oh, I'm trying. I feel like the unpopular kid, like trying to push RTY up and NQ down. I'm like, right. Just yeah.
Like, I'm not one of the cool kids, that's for sure.
That's how I feel, because I feel like when I started shorting NQ, everybody started talking about the breakout. I was like, I was talking about the breakout 500 points ago. Where were you? You know what I mean? But now I'm like, I think it looks a little toppy. I don't know.
I don't know if I'd say it looks toppy. To me, it looks overextended.
Yeah, that's what I mean. And I called it an interim top if it is a top. Like it, if I'm right, I don't think it's the top for sure. Well, I don't know, but I think if I'm right, it could be an interim top. And then we'll see what happens. If not, then I think it'll keep going to the moon and I'll just get depressed about me not being able to pump my RTY against it. Anyway,
That's exactly right.
Thank you so much, Helene. I really appreciate you. You're fabulous.
Thanks for having me.
Everybody follow H. Meisler on Twitter. Also follow @Place Your Trades and Cordova Trades as well. And I hope you have a wonderful trading day and week. Okay, bye, everybody.